Hey guys, on today's spring market update, I'm gonna break down inventory, inflation, and interest rates. There's a lot of crazy things going on in the world right now, but let's take a look at the numbers and try to understand what that means for all of us here in the Bay Area, thinking about buying or thinking about selling a home. All right, let's get started. All right, on today's agenda, we're gonna cover how is the market, what's happening with interest rates and home prices, and is today's real estate market sustainable or will we see a crash? Okay, let's talk about what's going on. How is the market? We keep watching for it, right? But there are absolutely no signs of a market slowdown anywhere in the data. If anything, this is funny, this makes me laugh. We're seeing the market continue to heat up. Let's take a look at this. Active listings drop again. So this probably correlates with what I was talking about in January and February. We're seeing the lowest amount of active listings in the last 3 years. And you can see by this number, this is national numbers, 376,000 homes total listed on the market in February, a decrease from January and consistent with the lowest we've seen in quite a while. However, in spite of that, existing home sales have hit a 15-year record with 6,120,000 homes sold in 2021. Looking at the changing composition of active listings, what this is how many listings carry over from month to month as if they're stale listings, they're not getting purchased versus the number of new listings. And as you can see in 2022, we have an insatiable market demand compared to previous years. All right. So what actually happened is that because of the war, we just saw a slight retreat in interest rates. And what that meant was an advance in the housing market activity, which correlated with a massive increase in inventory in the Bay Area as buyers sought to find the right home. Just in the past 2 weeks, we've actually helped about 4 buyers find and get offers accepted on houses. These are buyers that have been looking for weeks or months, kind of working through the holidays and the spring, and with the new inventory and this rates were racing up because of inflation and everything people were talking about, but we saw a little pause because of this war thing that's going on. Goodness. But another good sign of increasing housing inventory is also this. This is going to be the number of 1,000 housing starts, so new 118,000 new builds on houses scheduled for 2022. All right, here's another great metric of the strength of the market right now. There's a lot of new housing starts. So this is builders building new homes, projected 118,000 new homes built in 2022. There's a lot of builders working around the Bay Area. They're building great homes and they're very competitive, very nice, very modern, hold value, 10-year warranty. How can you go wrong, right? All right, let's take a look at this. This is the chief economist from Realtor.com. While new listings started on a somewhat weaker note, right? Very slow this year, and have trended below previous year levels at the beginning of 2022, slow spring. The annual rate of decline has steadily improved over time, actually, and turned positive this week. I think that correlates with what I said. The inventory is going up and things are good. Even after adjusting for the storm-related factors, the growth rate in newly listed homes remained positive. 3.2%, suggesting a breakthrough in housing supply. So this is positive, yet another positive indicator that this growth rate of newly listed homes, as in the confidence that these big builders have in our market. If they have confidence in the market, that's one more happy person at the table, right? All right, the appreciation forecast. Now this is crazy. Last year, we saw 15% appreciation. Now, what's crazy is that in some pockets, we saw 15% appreciation in just the last quarter of last year. But what's nice to see is that we have a projected 9.6, I think this is a national number as well, 9.6 projected appreciation increase next year, which is not too shabby. It's funny, we used to joke about having double-digit appreciation in the Bay Area, and now it's like, it might be a national thing. That's cool. Okay, and why that all matters? Well, real estate is the time-honored inflation hedge. We talked about inflation going up, but interest rates trying to tamp that down, how those fight. Real estate is a tangible asset, so that will hold its value when inflation reigns, unlike a paper asset. So look at this when you look at how home values and inflation have kind of walked side by side for ever since the 70s. What we see is that home price appreciation is kind of tied to it. These last 2 years, it's interesting because you see this big discrepancy in 18% appreciation last year. That was almost too much, I would say. but that was accompanied with a 6.8% increase in inflation. By the fourth quarter of the year, we saw those big inflation numbers for, the strained supply chains and, labor shortages, who knows? But when you look at it in this trend, this trend, it speaks true. Interesting. Look at this. Now more industry insiders are throwing out their previous forecasts. This is crazy, right? And they're replacing them with more bullish short-term outlooks. So some experts say that the 2022 spring housing market might go down as one of the most competitive on record. I can attest to that. 40 offers on a home just a few weeks, like 3 weeks ago. Yeah, crazy. All right. This is a potential growth in household wealth over the next 5 years based solely on increased home equity. If you purchase a $350,000 home in January of 2022, it's a lot of words to say that if you bought a home in January of this year and it's $350K, you'd make about $90,000 over 5 years on average, just from appreciation. Now, if you think about it, maybe you can rent it out, right? You can rent it out, get a 20% down mortgage, well, 25% down mortgage probably. That's for investment home, by the way. 25% down mortgage, $350,000 home. I mean, in most areas, you should be able to find a home that'll pay for itself, pay for maintenance and expenses and taxes and everything like that. Maybe you'll cash flow $100 a month. Yeah, so it's like what you could do. You could cash out refi $90,000 and you can go buy one more home after 5 years. That's cool. That's cool. Pays for itself. Cash out refi and buy another home. It pays for itself. Self-sustains, right? Maintenance and taxes and everything. You put property management there, and it's self-sustaining. Build it like that, and then it appreciates. $90,000 over 5 years, you cash out refi, and then you go buy another one. It just made a baby. Is that crazy? That's so cool. Okay, what's happening with interest rates and home prices? Look at this. Mortgage rates fall. Believe it or not, can you believe that? Inventory was so low, inflation was so high, everyone was, but then this war happened, right? And mortgage rates are falling, I guess. That's cool. Very cool. A little pause because they were going up very fast. People were getting scared. But here's what they're saying. Rates are expected to stay low in the short term, but will likely increase in the coming months. So that means buy some inventory right now. Look at this. International uncertainty brought about by the conflict in Ukraine is outweighing hawkish Fed's fight against inflation. The current flight to safety from equity to fixed income markets is driving up the demand for the 10-year Treasury notes and pushing the yields down. So this will put downward pressure on the mortgage rates. And basically what that means is the war is going to drive down mortgage rates. Really? That's a bold statement, but I mean, looking at how those mortgage rates were going straight up until this happened. So let's see how that all plays out. Look at this 10-year Treasury yield. So, it's good, Like I said, too much growth is not always a good thing. Okay. But look at this, yeah. So even in the past 50 years, our 30-year mortgage rate has always moved in unison with the 10-year Treasury rate. So, yeah, I guess going back down. That's good though. More opportunity for buyers. Buy up this inventory. Let's get some homes. Okay, mortgage rates fell this week as investors sought safety by buying mortgage bonds. This decline in rates is temporary, because the Fed is going to start their rate-raising campaign in earnest by the middle of the month, probably by the time this video comes out. So let's see how everything goes. After cooling in the summer and fall of 2021, the Black Knight's home price index and collateral analytics data sets show that home price growth is re-accelerating in 2021 and 2022 due to, in part, worsening inventory levels across the country. That's exactly what we saw in the past 2 months, are rapidly accelerating prices. Let's see how it all reacts once we have this new inventory come to the market. Watch my March market update video. Just this last few weeks, we've seen 200% inventory increase in some of our local markets. Let's see how that turns out. Stay tuned until next month. So this graph shows price appreciation increase this is like a year-over-year comparison. So compared to last year, what we actually see is that we have an increased momentum when we compare our year-over-year price increases from last year to this year. So it's like we're growing even faster than we grew last year. Crazy. Probably because there's less inventory. Look at this. So this is home price forecasts for 2022. I know we have an average of 6.1 with a high of 9.6 from CoreLogic. 3% increase by Zelman. This is all national statistics, so take it with a slight grain of salt. We're always a little more in the Bay Area, but 6.1% national average. I mean, that's pretty dang strong considering we just had a massive growth year and everything over there. Cool. Is today's real estate market sustainable? So after I told you all those crazy numbers of everything, is this sustainable or will we see a crash? Well, worries of a housing bubble. It's so funny because almost all my clients ask me, do you think there's a housing bubble? What do you think's happening? Like, okay, so what I can tell you, don't read the news. You can read the news, but this is what came out. U.S. foreclosures surge, like highest since pandemic starts. Actually, that's not what's happening. Foreclosures are not surging. There are 4,784 foreclosure completions in 2022 versus 2020 and 2019, quite a few more. It's actually interesting, we were talking about this at our brokerage, but like the forbearance actually really did help a lot of people. And the people that were able to make ends meet, with just having additional time, additional options. Sometimes forbearance would give you another 24 months to figure your stuff out. So, yeah, that's good. It's very important to keep these numbers in context, though. According to Mr. Sharga from Realty Track, we're likely to consider seeing large year-over-year price increases for the rest of the year, but it's also likely that foreclosure activity will remain below historically normal levels until the end of 2022. That's all strong with stability. Also, this is nothing like the last time. We call them, the no income, no job loans. Can you believe that in 2007 that you could get a loan to buy a house with no income and no job? Like, that's why the market crashed. So as a contrast right now, right, the volume of loans with a credit score of less than 620 is very small. Clearly, we learned that lesson. Wow. Now we're looking at the inventory of homes since the crash. Like when we had the housing crash, it was a massive buyer's market. There was tons of homes on inventory, months and months of them. There's so many homes you couldn't even, there's so many to choose from. Deep buyer's market. We are the opposite. We are a struggling a happily struggling seller's market. Look at 1.6 nationally, 1.6 months of supply of existing homes. Nationally, that's almost nothing. Bay Area, that's pretty typical, like less than a month's supply of homes. That's pretty typical, 20 homes on the market. Yeah, that's like less than a month's supply. But nationally, to see those numbers, that's crazy. That indicates demand and strength, but in a good way. Buyers have to compete, but when that competition brings home values up, as long as it's under control. All right, this slide talks about the impact of inventory on home prices. So when you have less than 6 months of inventory, that's called a seller's market. That's what we almost always perpetually have here in the Bay Area because of the massive demand, because of the jobs and the weather and everything. But nationally, yeah, if you have 6 months of inventory, meaning that there's 20 homes, let's say there's 100 homes on the market and they buy 5 homes a month or 15 homes a month, that's a 6-month inventory, kind of like that. It's crazy because here it's like we have 120 homes and 60 went off, 70, 80 went off the market. Crazy. Okay. But yeah, a neutral market means 6 or 7 months of inventory. Buyer's market, 7 or more months of inventory. So look at this. Loans in forbearance is actually falling, which is good. Like I said, forbearance is really helping people out, but the fact is that those numbers are going down. Very good. That's strong. And then actually, I like this slide the best. So loans upon exiting the forbearance program. So if you look at this in this pie chart, only that orange area, that 1.3% plus that 17%, only like less than 20% of people like actually lost their home, which is good. Normally in foreclosure, it can kind of vary. It's, closer to 50-50, but here with forbearance, it's nice to see that less than 20% actually lost their home. So here's another one. Look at this. Foreclosure activity is at an all-time low. Very just strong numbers. This is what we want to see. A surge in foreclosures as the forbearance plan is very unlikely. The very rapid home price appreciation in 2020 and 2021 has boosted home equity. Record numbers of home equity will help limit the number of homeowners that experience foreclosure. I just wanted to tap on this slide again because out of everything, this is what's showing the momentum in the market, that there's a lot of people that need new homes, and especially, a lot of this was brought on by the pandemic, with changes in their job, changes in the way that we live and we work, we go to school. A lot of people have needed to change where they live and needed to make that adjustment. So that's kind of why we have so many people, so many home sales. It's interesting in the Bay Area where We used to say it was about, on average, 6 years between when someone would move to the Bay, buy their first home, live in it for 6 years, then move out to the next one. With how much prices appreciated in the past few years, it's actually more common to see people move out after just 2 years. Taking advantage of that, of the $250,000 or the $500,000 capital gains exemption right at the 2-year cutoff for your primary residence. There's a lot of people that are doing that, upgrading straight from that condominium or townhome right into a single family home, all because of the appreciation we had in the Bay Area. So, you know, I know a lot of people say it's a tough market to get into, but trust me, it is tough because it is worth it. Let's do a quick recap. Spring is projected to be a historically competitive market. We've seen super low inventory and a ton of competition already, but you know, we've just seen a decline in interest rates. That gives us some pause. There's a lot of new inventory coming to the market, so that's hopefully going to get a lot of buyers in contract that have been looking for the past 3 or 6 months. But sure enough, you know, as soon as everything gets straightened out, I'm sure interest rates will start racing up again. But one thing to remember is that this market is nothing like the last time. You know, at least, especially in the Bay Area, we have a ton of equity in our homes. We have a lot of jobs, a lot of demand. So, you know, I think I have a lot of confidence in real estate around here. Thanks for staying tuned to the end of this episode. I hope you enjoyed this market, my spring market analysis. This is going to be kind of a new thing that I do, a little bit of a deep dive into the statistics and the figures. But it really does interest me, you know, looking at interest rates, looking at the housing market, trying to put it all together to figure out how we can create new opportunities for our buyers and sellers. So remember to keep us in mind if you need any real estate help or advice, or maybe you know someone in your network that might need some help with real estate. Maybe they're thinking about making a move, they need a little more room at home, or they've got a change coming up. It's important to have a realtor helping you early on in the process so you can have the maximum amount of options available for you and your family. This is Michael Soldano with the Amanda Vang team. Tuning out. See you later, guys. Bye.